Hello, everyone. I, Tahsin Sultana, Assistant Professor, Department of Commerce, Government First Grade College, Preseton. In this session, I will be discussing pros and cons of mutual funds. The learning objective of the chapter is to provide an understanding of mutual fund as an investment outlet and personal finance and investment. Session outcome, students will be able to understand the advantages and disadvantages of mutual fund as an investment option. In the previous session, we have learned various schemes of mutual funds. Before going to the advantages of mutual fund, let us understand what are mutual funds. Mutual funds is a trust that pool the savings of numbers of investors who share a common financial goal. The money collected is then invested in capital market instruments such as shares, debentures, and other securities. And whatever returns they get from the investment, like in the form of dividend or interest or any capital appreciation, will be shared among the unit holders in the proportion to the number of units owned by them. The funds are invested in securities in accordance with the objective as disclosed in the offer document. In the offer document, they would have mentioned in what sector they are going to invest, in what specific industries they are going to invest. Based on that, the investment will be done. The investments are spread across a diversified that reduce the risk because all stock may not move in the same direction, in the same proportion, and at the same time. This diversification gives the investors high returns at a very less risk. Now, the question is why do these investors go for investment in mutual funds? The very first reason is a common investor will not find time. The time for doing a research, selection of companies, tracking the returns of those companies, or analyzing the performance of that company, reading the history of the company, etc., they don't find time. So they directly go for investment in mutual fund, which is a ready-made. And the other reason is mutual funds investors get benefit of diversification for the small amount of investment for the small amount of savings. Now let us try to understand the advantages of this mutual funds. The first advantage is diversification. Mutual fund investment are a number of companies across a broad cross section of industries and sectors. This reduces the risk because not all these stocks will decline at the same time and in the same proportion. So, this gives the benefit of returns to the investors at a lesser risk. Expert supervision. Mutual funds provide the services of experienced, skilled professionals, knowledgeable people who work with them. And they also have a dedicated investment research team which will continuously do analysis of the performance and prospects of the company and then select a suitable investment option which gives the investors high returns. The next advantage is liquidity. The investment in mutual fund can be converted into cash promptly with brokerage expenses and no delay. There will not be any brokerage expenses or commission, and there will not be any waste of time. The next advantage is reduced risk. Mutual fund investment will be in large number of companies and are managed professionally. The risk factor of the investment is reduced. Here, the professionals will work as well as it will be diversified. Investment will be diversified. So, the returns will be high and the risk will be very low. Tax advantage. There are many schemes of mutual funds which will give tax advantage to the investors. Like for example, ELSS, equity linked schemes, which are covered under section 80C of income tax law, which will give income tax rebate or benefit to the investors. Low operating cost. Mutual funds have large amount of investable funds at their disposal that can enjoy the benefit of economies of scale and reduce the operating costs like brokerages, etc. Flexibility. Flexibility. Mutual funds provide flexibility investment plans. There are schemes like regular withdrawals, monthly income plan, dividend reinvestment plan. These are an investor can invest or can withdraw funds based on his requirement. These are customized based on the objectives of return and risk of the investors. High returns, the next advantage. These provide high returns compared to the direct investment schemes because of diversification and professional management and economies of scale. And the last advantage is investors' protection. These mutual funds are monitored and regulated by Securities Exchange Board of India. The disadvantages of mutual funds. The first disadvantage is no control over portfolio. A unit holder in a mutual fund is just one of several thousands of investors in a scheme. So, the security selection will be done by the fund managers. They will not take any opinion or idea or likes or dislikes of any of the unit holders. So, no control over the portfolio. Choice overloaded. It refers to there are more than 2000 mutual fund schemes. So it becomes very difficult for the investors to choose a scheme which suit his risk and return objective. The next disadvantage is no control over cost. Cost incurred for managing the schemes are shared by all the unit holders in proportion to their holdings. So the investors will have no choice of controlling the cost. The next disadvantage is over diversification. Based on over diversification, the high returns do not make much of the difference. The returns will get diluted. Diluted refers to if certain specific stocks, if they are giving high returns, and there are other stocks which are going under losses, the losses will be covered by this the high return stocks, so it will get diluted. The size, last disadvantage. Some mutual funds are too big. They have too much of money at their disposable for investable funds. So they may not find the very good companies where they can put these funds as investments. I hope you have understood the advantages and disadvantages of mutual funds. Thank you.